Hi, Rick. It's great to have you here. I know you have seen, or maybe you know about Alex Honnold, free solo in Taipei 101 on the past Sunday. And you are the fixed income CIO, managing over 2.7 trillion assets. I think your job may not be much easier than free solo in Taipei 101. So before we go to today's QA section, I would like you to introduce more about yourself to share your background with our investors in Taiwan.
Well, thanks for having me. And it's a great honor for me to be here and being a great partner with your firm and your company. It's great to be here. I will say a couple of things about watching that gentleman climb the building. Sometimes I do feel like when you're investing and you're investing at the scale we are and you're taking risks, sometimes I feel like I'm out there without ropes or net and in terms of how these markets can tend to move. But listen, I grew up not knowing anything about finance, and my background was my parents were small business people, but I learned about business and companies, and I went to business school for finance, and then I went to my graduate school degree at Wharton School for finance, and I learned a lot about finance and to become a financial analyst. But then, through just a twist of fate, I ended up becoming a trader, which was fascinating for me. So I spent almost 20 years trading and learning about how markets move across corporate bonds, treasury rates, currencies, and I learned about how different investors manage risk and how they think about their portfolios. And then, but my focus of attention was every day. I needed to generate return every day. And then my career transitioned when I started managing money for BlackRock, because then you had to step back and become more of an investor. And I have to say, it took me a year or two to figure out they're different. I figured out trading, you want to be right quickly. And investing, oftentimes, it's not actually being right quickly. It's you want to step back and think about where are we going? And then when you have, even if you lose money in a short period of time, is that setting you up for returns going forward? So having that background of being, learning about business, my parents are both business people, how do you think about business, how do you analyze business, and then trading for a while and learning about how great investors think about their portfolios and how they manage it. And then, like I say, it took me a year or two, but now, I feel like, I step back and think about things, think about the broader perspective, and it's been a big help to me in terms of managing money and thinking about, don't worry about, and one of the keys I think has always been, don't worry about what I call the noise, and you got to separate noise from news. And it took me years of trading to figure out, okay, that'll move the market in a short period of time. Where are we going? And then how do we invest around it? And how do you try and create portfolios efficiently for where the real world is moving?
Okay, great. Thank you. So I will start with the most frequently asked question. So looking ahead of 2026, what factors do you believe will continue to drive the market performance since the bull market has lasted more than 3 years? And any potential turning points you would like our investors to bear in mind?
It's a great question. I would say one thing about 26 versus 23, 24, 25 is I think you have to think about, I call it respect gravity. Maybe it's back to that person climbing the building, because you have to respect gravity. That's certainly more acutely there than anywhere else. But I think you have to, do your point about after you have a period of very good performance, equity multiples, valuations become very high, credit spreads don't give you a lot of room for error. But that doesn't mean it can't be a good year. And in fact, I think it'll be a good year. You just got to think about it differently, meaning you have more volatility, and including once equity valuations are high, companies have to keep achieving beyond expectations. So you have to recognize the fact you're going to have some pullbacks, you're going to have more volatility. So what we're doing, particularly in our equity portfolios, buy some volatility, create more hedges than we've created in the past. Take some of the extreme positioning, things like technology have done extremely well, healthcare technology, still be in it. So for example, AI has been the trade of maybe the decade, maybe the last couple of decades. But now maybe you diversify it a little bit more and say, gosh, I still like AI, but maybe I want to be a bit more conservative. Things like the big companies, hyperscalers, who's producing memory, some of the companies that are the construction agents to build AI, diversify it a little bit more. Things like software, not as, maybe can change. So we're changing around some of the positioning. And fixed income, it's very much diversify, keep it stable. And so, I call this the golden age of fixed income because you don't have to take a lot of risk. And that is, we had years of zero interest rates or negative interest rates in Europe. Now you don't have to take a lot of risk. You can build portfolios 6%, 6.5%, almost 7% yields. Don't have to own a lot of long end interest rates. Buy things like mortgages, AAA assets, use some of the securitization market. It's very different how we're running fixed income and how we're running equities. And I've learned this over my career. Fixed income, if I can just keep clipping yield and stay boring, use relative value to just keep it stable. Equities, I want a little more excitement. I want some upside. Technology is great where you're in technology. So this year, a couple of key themes. It's a golden age of fixed income. Keep getting yield, keep getting income. If we can maybe turn a 6 or 7 income into maybe an 8 or 9 if we do it right. And then in equities, you can't shoot for the moon in terms of real concentration, but are you in the right sectors? Financials have been good, using, and I think emerging markets is something we're going to do a lot more of in 2026. So different than in the past.
So in recent years in the equity markets, I think the winners are AI-related theme equities. Are you worried that the valuation is too high, or do you think the trend will be continued or to change, as you just mentioned, for example, to emerging market?
So I think AI may be the greatest, I think we're in one of the greatest productivity revolutions of all time. I think AI is going to change the world in so many different ways. I use it, I've become very, very intense about using AI. And almost every day I'm asking questions, how we think about getting data and what have you. I think AI is going to change the world. But I would say AI, automation, robotics, how we actually can produce, run efficient, use data efficiently. So I don't think AI, and people say, is it a bubble? I don't think it's a bubble. But I think you have to think about it a little bit differently because there are going to be some companies that are going to spend huge amounts of money. And the question is, when do you actually start to see the cash flow on the other side of that? And I think some businesses, how much risk do you want to take there? But I think you got to be thoughtful about, the amount of cash flow that is going to be built, memory, cloud, power related, that are going to go into building this AI ecosystem are very real. By the way, I'll say one thing about it. People say compare it to the internet bubble. If you go back to the late 90s, you didn't have any cash flow coming off those businesses. These big hyperscalers today have immense amounts of cash flow, and I've seen data, which I think is right, that if you evaluated some of those companies at where they were in 99, 2000, based on cash flow, these companies were worth 7 times what they are today, meaning they're good businesses, and because they throw off so much cash flow, they can buy back their stock, they can invest in CapEx, they can invest in R&D. And the thing that's pretty amazing about watching corporations for so long, if you can invest in R&D and CapEx, your forward pipeline of revenue and earnings is going to be quite substantial. So I don't think it's a bubble. I think you got to be a little more careful because you're just going to see money piling in and valuations that won't really be supported by cash flow for a longer period of time. But there are so many businesses that are benefiting from it today that I think you got to stay in that.
Okay, totally agree with your thoughts.
Thank you.
So beyond traditional bonds or equities, we understand that you often leverage on diversified assets such as commodities, gold, or like derivatives, etc. So could you please elaborate on how do you incorporate those tools into your portfolio? And how do you balance between the risk and returns?
Yeah, listen, the core of our portfolios, I think, is always going to be equities and bonds. But you can use those equities and bonds to your advantage in many ways. So when you talk about derivatives, what happens is people do a couple of things. One, they pay for insurance at very high prices. So oftentimes, we say, gosh, maybe it's more efficient to not necessarily own the stock, but maybe I'll sell puts. And I get paid and maybe I can sell puts to buy calls, and I can create a much better convexity and much better risk-reward paradigm. So I'll use that quite a bit. There are oftentimes, some of these stocks are highly volatile. If I'm going to be long the stock and I know I'm going to sell it, up 15%, up 20%. I will literally just offer it there on a call option. It lowers my cost basis and allows me to take advantage of more income in the portfolio. So we do a lot of that. Today, into 2026, I'm buying more volatility protection, and it's actually pretty reasonable to buy it. And so what I end up doing is you can trade your underlying portfolio around that, having that volatility. So we do a fair amount of that. Listen, I think one thing that's different than the last couple of years is the dollar and how you think about fiat currency or currencies. So hard assets, gold is the primary one we like to use, but hard assets and how you have some of that to protect you against depreciating currency. I think that's got to be a part of the portfolio. I'll use pieces of Bitcoin from time to time because I think the growth of people using it. So anyway, I like to be involved in that. Again, much smaller size than we use gold. But it's a different environment when you've got currencies that are less stable. And so one of the things that we do is places like emerging markets where you get to diversify where some of your currency is. And I think that's going to be a big win this year.
Okay, great. I would like to learn more from you and introduce to the investors in Taiwan. So the next one will be quite different questions. So are there any key issues investors should pay attention to the U.S. midterm election? Any risks or opportunities you observe?
So I would think a couple of things in the midterms that I think this is going to be a more focused upon midterm maybe than we've had in certainly the last couple of decades or so. So I think there's some key things that are going to be important around those midterms. One is, what are the focus points that are going to be the administration is going to want to see some encouragement around? Lower gas prices, lower power prices, lower housing prices, greater affordability. So one of the things I think you got to watch is what are the incentives that those create? And where are the companies you can invest in around that? I also think that things like deregulation of businesses, power, energy, financials, to create more business momentum, something we're going to watch very, very closely. And then the last thing that I would say around that is I think all the tools that allow companies to grow, M&A, merger and acquisition activity, there's going to be a big deal for companies. Can they grow? Can they reduce their costs? And I think you'll see some incentives around M&A that we haven't seen in years. Companies consolidating, creating synergies. So there's a bunch of things we're watching around that. I think to me, the big deal will be watching how the economy grows. And I think for the central banks, the big deal would be, can the economy grow and can we hire people? Because we've had an economy that's operating extremely well, but what are the encouraging trends that allow for more people to be hired? And I think that's going to be a big deal for how do you think about the midterms and getting more people employed?
So the last question was definitely related to AI. BlackRock estimates that AI investments could reach about 8 trillion by 2030. So I would like to know, how do you or your team leverage on AI for daily work? And also, do you start to see corporates generating profits by using AI? And also, in your imagination, how AI implementation could possibly do?
So I have a crazy habit of I get up at 3:45 in the morning and I try and learn about everything that's happened overnight, what happened the day before. But it's a good example of how AI is changing how we do everything. I get a run that is generated by AI that looks at markets, economic data, performance of our funds, flows, and quite frankly, I get so much information instantly. It's changing the way I think about a lot of things. The other thing that AI is allowing us to do is, you think about the broad fabric of investing, and there's so many different tools we look at. Liquidity, I look at beta, dispersion, correlations. What AI allows us to do, to think in planes, like the human brain can only think on so many levels. What AI allows it to do is expand the series of levels and layers you can analyze so that you could do stress testing, scenario analysis, data simulations, assimilate data quickly and put it into a cogent set of views. I think it's mind-blowing. I think it's, one man's opinion, I think it's the most exciting time to ever be around investing and technology generally, I think what companies are going to do is going to think about all forms of their business. How do you attach to your client base more efficiently? How do you advertise? How do you draw customers into your business? And then, how do you run a more efficient portfolio? And robotics and automation, how does manufacturing change? Listen, I've been doing this for a really long time. This is the most exciting time that we've ever seen in terms of change and development and what have you. And I always say that, why do I keep doing this? Why do I keep staying in this business? Is I think I'm learning more about investing, industry, technology change than I've ever done before. And I think it's, I always try and be like when new things come out, new products, my family knows, like I got to be online first to get that new product because I think it just gets you thinking about where things going. And I think this is the most exciting time to do that.
Yeah, great. Rick, thank you for sharing your thoughts with our investors in Taiwan. And I look forward to seeing you again soon.
Thanks for having me. I appreciate it.
投资一定有风险，基金投资有赚有赔，申购前应详阅投资人须知或公开说明书。